So the top 5 stocks that we are watching this week, what are they? It's going to be a little bit interesting because from an earnings standpoint, it's super boring. Not a whole lot going on as far as that's concerned. But again, as we had said, there's all kinds of other stuff as far as just stocks to watch. And we're starting to see some stuff kind of return from the recovery stock standpoint, but some of the remote stock and stay-at-home type stocks are still relevant and will continue to be relevant. And we're going to explain why. But the first one I'm going to talk about, and I'll share my screen here, and bring you on over to Webull, which is the platform that I use. And if you guys want to see the portfolio that I have managed through Webull, again, that's going to be with the Chaos Crew. So make sure that you guys are part of that. But this one's going to be Under Armour. And this is interesting because Under Armour has been pretty abysmal, really since Kevin Plank and the controversy surrounding around that and their accounting issues. If you guys recall a couple of years ago, they haven't really recovered a whole lot from that. That was one of their biggest detriments. The other one was that they just kind of spread themselves too thin and spend too much money, especially when it came to sponsoring colleges and that sort of thing. It was a great platform and they grew tremendously, but to a certain degree, I think that they grew too fast. This is one of these ones that you just love from a Marylander because it was born and bred in Maryland. And, I love the company. We love Kevin Plank. It's just that, the way that they ran the company initially, just wasn't the best way. Their attitudes are great. The way that their mentality was awesome. But again, the spending just really killed them until now. They've started to back away from spending so much money. They actually dropped their contract with UCLA and a lot of other colleges to try to, recoup some of that money and save some of it in order to use this to something that's interesting. And I didn't even realize that this was going to become that much of a thing from a retail space, but it's content creation. Retail is coming back as a whole. So we saw that with Nike and everything else. And this is obviously a huge competitor with Nike, but they are the first company, the company wants to shift spending to content creation. As an example of this shift, Under Armour has changed its strategy on Facebook and Instagram from its product shots with an obvious website button to scene shots with athletes wearing Under Armour products that can be shopped directly from the post. So it's very interesting how they've been able to create this kind of content through social media. And this is all via Yahoo Finance, by the way, that I've pulled some of this information from. But I thought it was really interesting as far as Under Armour is concerned. It's nice and cheap. They're on the up and up here. We're seeing them recover quite nicely. They're starting to change things around. They're realizing how much the spending was hurting them, and I really like Under Armour a lot.
Yeah, I was excited when you said you were going to put this on because this business, this is what I like to talk about. And so I'm going to give you guys a lot of information. Buckle up. So let's see where to begin. Them pulling out of their deals that happened back in June, which I believe this Rona is actually going to maybe prove as a pivot point that like maybe could be the best thing that happened to this company. But to your point about they spread themselves too thin, let me tell you about Under Armour. I'll give you guys a little bit of background. If you're not from Baltimore, you may not know all of this if you don't follow. Because like for me, I can see Under Armour sign across the water.
I know.
So, we're in the thick of it. We have a lot of friends that work for Under Armour.
It's right in front of our face all the time.
I don't know if Under Armour spread themselves too thin. That argument could be made, but they were trying to grow.
Yeah.
I think the owner, Kevin Plank, the CEO, spread himself too thin. So at one time, Under Armour was getting all these athletes. Steph Curry in 1 year, Cam Newton was in the Super Bowl and the MVP. Steph Curry was in the finals in the MVP. They had Jordan Spieth who'd won Masters, and then they had somebody. Bryce Harper was the MVP. That's all in the same year, right?
Yeah.
And from then it kind of started falling apart. But what Kevin Plank did was he started the Sagamore brand. So he started getting into horse racing, bought a Sagamore farm, built literally a hotel a block from me, partnered with Pendry called Sagamore Pendry. It's beautiful, but it's been going on for over 7 years. I believe they started building it.
Yeah.
He started an incubator for businesses, Sagamore Rye Whiskey. So those are some of the things he's done, and that's not everything. So those on their own are big businesses. To run a whiskey company takes everything you have.
Yeah.
So that's where, I mean, this, we've been talking about this for years locally. Like, man, he's doing a lot. So think he started feeling himself a little bit, got a little cocky, and it hurt the Under Armour, which is his cash cow. Now let's think about Under Armour. I'm gonna point some things out why I too feel really good about Under Armour. This is going to take some time, but here's what I feel good about. So they're pulling out of, let's explain UCLA and Cal, which are contracts that they're pulling out of, which are multi-$100 million contracts. I think UCLA is like $200 million contract.
Giant. Yeah.
So Steph Curry is in California. He plays in Oakland, San Francisco. Right. Okay. So their goal was to take over that market. So they thought, let's take UCLA, let's take California, Cal, the schools, and they created that partnership. It didn't pan out like they thought. California didn't pan out like they thought. So they're pulling back on that. Awesome, pull back. The only one that really makes sense in my mind is Notre Dame. It's a national brand. People will wear their clothes. I'm not wearing a Cal shirt. I don't see it ever. You see Notre Dame everywhere. So that brand partnership makes sense. It's an independent company. But then when you look at the athletes they have, I think they need to also pull away from the athletes. Keep Steph. Steph can do, they have a golf line for him. They have basketball. That's great. But nobody else really pans out. And I won't get into all the basketball players, but nobody else pans out. Here's where they need to lean into. Okay. Do you know what the turning point for the company was? Like when the company really blew up? You know what the catalyst was?
I thought maybe it was, had something to do with The Rock and when they got into baseball, when they started getting professional sports, that was a big deal for them.
Here's a clue. It has a similar name to ours. It's a movie called Any Given Sunday.
Oh,
the reason the company blew up was because of their partnership in Any Given Sunday.
That's right. I forgot about that.
Yeah. So let's think about that. That wasn't an athlete.
Yeah.
There wasn't any of that.
Right.
And so I believe they need to stop trying to compete with Nike. Stop trying to compete with these famous athletes. Like, go for the Rock partnership. I think is a smart partnership. I think the non-traditional, I think you go for influencers. They have Missy Copeland, that's non-traditional. And one that's really cool for all you people that I bet you didn't know is Virgin Atlantic. Virgin Galactic, SPCE.
I didn't know that.
Yeah. So they announced like the beginning of last year that they're doing a partnership. So they're going to design the spacesuits and the footwear for that.
Wow. I didn't know that.
That's cool as shit, right? And everybody's going to be watching that. Just like you saw the Tesla vehicles.
Yeah.
You're going to see Under Armour, right? So do more of that.
Yeah.
Get with like influencers that have a huge following. And so I think you get away from it. I've heard they've had a lot of challenges with like, you know, you have Bryce Harper, he has baseball cleats, but you're not buying Bryce Harper shoes.
Right.
Cam Newton, you're not buying Cam Newton sneakers.
Right.
Get out of it.
Yeah.
Rock stuff, doing really, really well. Those are the reasons why I really believe in the company. And I think that cool SPC thing is a sleeper.
Yeah. I mean, I don't know if, and to your point, Shopify said that 93% of buyers cited visual appearance as a key factor in their buying decisions. So that just plays right into that. 93%. That is a staggering statistic. So getting into content creation or content creation alone, I think it's going to do wonders for them. And when you look at some of the other companies that have been doing really well, that makes all the sense in the world, especially because e-commerce has been booming. Everybody's been buying things online. So if they're online and they see this kind of stuff online, it's going to, influence them to buy it. So I think that's a really, I saw Melissa said that
did my homework.
Fat Man Zoom did your homework. Yeah. So we're just getting right into it, guys. We're hitting it hard on you.
Yep.
Right out the gate.
Let's get into the second stock, which is an earnings play.
Yep.
Levi's, LEVI, if you want to pull that up.
Yep.
So Levi's is reporting earnings Tuesday after hours. Their estimated is negative, a loss of 22 cents a share. My prediction is that they beat, but they still have a loss of 18 cents a share. And here's why. So they had last quarter was a horrible miss.
Yeah.
But in the quarter was March, April, May. So no one could have predicted that.
Yeah.
But I think they report positive guidance. So even though they're going to report a loss, I think they reported positive guidance. And here's something to consider. I didn't realize this. Levi's is an old company, but like Levi's IPO'd in March of last year.
Right.
And so their expected range when they IPO'd was $14 to $16. What are they at right now?
They're at 14.15.
It opened that day on the IPO day at $22. So remember when we were talking about like how Facebook dropped and we were talking about stocks that like, you know, kind of they blast off and they kind of jump down. Like it's interesting because they're at levels now where they were initially valued pre-IPO.
Yeah.
So that's something to consider if you're thinking about getting into a stock like this. It had some turbulence, but leading up since the IPO, but leading up to March this year, it actually showed signs of life and looked pretty good. So, you know, it was around 22 to 24 when it IPO'd in March, kind of showed a steady decline, but towards the beginning of this year, it actually was going well till about mid-February, March. And then it, you know, obviously went to shit like everything else. So
yeah,
I like it. I think it's a new stock that we're presenting that's at a, you know, I know a lot of people want stocks that are a little bit more affordable. There you go. You're welcome.
So here's my take on Levi's. And this is one that we kind of disagree a little bit on. I don't think they're going to beat earnings. I think they come in at a loss of around 25 cents a share. Their last earnings were pretty abysmal. And I'm not saying that their outlook won't be good. That is one thing that I do agree on. I think that their forward-looking statements are going to be what really is going to be key for Levi's. But my biggest concern is the same concern that I had for Stitch Fix. Even though I like the company, one of the biggest issues for Stitch Fix was the supply chain issues. And I'm not quite sure that they've been able to fully correct those just yet. And I don't know if that will actually reflect on this quarter, but perhaps next quarter, which is why I'm kind of curious to see how this actually plays out as far as these upcoming earnings. But to your point, it's nice and cheap. You know, you could, you know, afford, if you can afford to take a chance on this one, it's probably not going to move all that much. We've only seen some volatility on this from around $12 all the way up to around 14, 15 where it closed at yesterday, or on Friday rather. So the risk here probably isn't all that great versus the reward. And I think that that's the point that we're probably both trying to make here, is that, this is probably one to really just keep your eye on if you want to take a chance on it and see if it runs into earnings. But I think the real play here is going to be after earnings, and I think they probably end up missing.
Yep.
All righty. Getting on to the next one is going to be Domino's Pizza. And this is one that we love all the time. If you guys are in the Chaos Crew, you know that we've been probably one of the loudest cheerleaders for Domino's Pizza. Whether you like the pizza or not, they absolutely kill it as a company. They have had a ridiculous growth over the last decade and a half. They've been able to pivot a lot. They've listened to a lot of their customers as far as product and how they've revamped a lot of it. And it used to be, if you don't like Domino's now, and you didn't have it back, I don't know, 10, 15 years ago, it used to take their crust used to taste like cardboard. It was terrible.
Horrible.
So they've really improved their business over the last decade or so, and have had insane growth. Their earnings this month, or this week, which is on Thursday, pre-market is 278. I think they beat and come in at what did I have here? Oh shoot, what did I have? I just lost it. I think they come in at 316 is what my prediction is. It's a little bit of a bold prediction there, but I think they come in at 316 a share. And so this is going to be a good one that I think that really does well going into earnings. We love this stock. I think it's going to be a stunner.
Did you see my notes? You're about to steal my thunder. Check this out. All right. They beat. I'm going to take a step forward. I think this earnings, they report that they break $1 billion in sales.
Ooh.
They offer upbeat guidance with the fear of the second wave, and with people opting to deliver, right? You have the wave, you have weather. I think it's just setting up for a perfect storm for Domino's to offer ridiculous guidance. And I'm hoping that they offer guidance above $3 a share, which is going to be huge.
Yeah.
Okay. In the spirit of Stone Cold Steve Austin, I predict Domino's earnings opens a can of whoop ass at 316.
We did it again. What was the last one we did this at? Nike, wasn't it? We both predicted Nike. That's hilarious. People were already chiming in at 316 before you even said it. That's hilarious. That
the
is
old
so
Stone Cold prediction. Top rope, baby. DPZ. Let's go.
That's so funny. To kind of hammer this point home, Papa John's, rival of Domino's, as we all know, their sales have been rising by more than 20% in the last few months, and they really have been making a huge push internationally. And so if they're moving this much, I think that it stands to reason that Domino's probably moves even more. So, interestingly enough, though, after earnings from the last 2 quarters, the stock has dropped off for whatever reason. It could have been profit taking or whatever, but the earnings have always been good, and there's always been a drop off. So there's already been this huge run up. There's definitely that risk that the price could be baked into this expectation. So unless they blow everybody out of the water with these earnings, I think the play here probably would be after. Look to see if this actually pulls back. From the chart perspective, I think that there's definitely a case that could be made that this actually pulls back to maybe around 424, closed on Friday at 433. I'm willing to bet this probably runs into those earnings, but I think that, there's definitely, a case that can be made for a potential pullback, especially if this price is kind of already baked in, no pun intended, to the earnings beat.
Absolutely. Moving on to the next stock, Delta is going to be the next stock. Delta has earnings also Thursday pre-market. So Delta's earnings estimated at a loss of $3.05. This will give us an opportunity to talk a little bit about airlines. My prediction, they miss a loss of $4.01, and they offer a bleak outlook. I don't think it's a surprise to anybody.
Yeah.
They're only relying on stimulus, right?
Yep.
Like that's the only thing that's really going to move this, but we do expect that to happen. So that's a good thing. However, outside of that, I don't think there's anything positive that's going to come. If they miss and stimulus hasn't been announced by earnings, then I expect it to drop. I'll scoop up some shares for the stimulus news if you want a spec play. I think that's a good spec play. Whatever your airline stock is, it doesn't need to be Delta per se, but that's a good one. We like Delta. We like Southwest, JetBlue's lower cost stock. I think that's all good. I'm going to give you some details. I wrote these down. September 14th, Delta announced they would leverage their frequent flyer miles to borrow $6.5 billion. We talked about that in the Chaos Crew.
Yep.
I don't love that, right? Like to me, it's worrisome. 16 billion in cash. They have 16 billion in cash. They have cash burn of $27 million a day. That leaves 592 days if they don't do anything. So just under 2 years, right?
Right.
Which is a decent amount of cash, but that's 2 years. Like even if you go a year, you just knock that in half. So that's worrisome. October 1st, Delta suspended operations to Stewart Airport due to lack of revenue and demand. Okay.
Yeah.
September 9th, they suspended flights out of Worcester Regional, which is right outside of Boston, major city, due to lack of revenue and demand. That actually will happen this month. It's happening. They don't have an exact date, but it's going to be in October. So any day now. But here's something interesting for the bullish side. American Express reported in September that their co-branded cards with Delta, Hilton, and British Airways have been performing better than their other cards. And they think that people are stacking points for a trip when this thing lifts. That's positive. And then the last thing I'll say is they reported that total miles redeemed fell by 78% in the first half of the year. So you don't have to use your points on flying.
Right.
So they could have used it on anything, but points fell. People weren't using their points. So again, I think that means people are banking for flying. So I don't worry about when there's a reopening. I think people are going to fly, especially on vaccine news. I think that's promising, but that's a longer time horizon.
Yeah, I mean, and that is just all great stuff. For me, the biggest rub for Delta right now is the lack of international travel. And so
Yes.
that's why we kind of really like Southwest and the JetBlues and all the domestic ones, because domestic flights we've seen actually an increase in demand on. And not that we haven't with Delta, but not only is Delta reliant on stimulus, but they're also reliant on international travel. And there's still bans everywhere. We can't even go to Canada right now. So that's also a huge
Hey,
cause for concern. And so they will come back. It's just a matter of when and not if, and if Delta can actually weather their storm. I think out of all of the major airlines, and we've talked about this plenty of times with the Chaos Crew and with you guys in general, that Delta is our favorite one out of all of these, because if there's any going to be an airline that survives this, it's going to be Delta. American
mhm.
Airlines is in a world of trouble. United is not. Not as bad as American, but their break even load factors are not great either. Delta has one of the better ones. Southwest has the best one. So this will be interesting to see. I don't think that the stock actually moves a whole lot off of these earnings because everybody knows how bad it is. So to your point, I think that we'll see a move on this. What was the expected earnings per share here? I had it written. Oh, here it is.
Loss of
Lost to
$3.05.
$3.05. I think that maybe they probably do end up missing on that. I'm saying a loss of probably about 350. I think it's probably still just that bad. But I thought that was interesting, the point that you brought up as far as them stacking points. We keep talking about this pent up demand, and that just kind of really proves that point. So that was a really good stat, man.
Thanks.
Sure. So coming up with the next one, coming up with the next one is going to be Rocket. And Rocket is one that, uh, you know, I don't like to say I told you so a whole lot on this channel because I really try not to be that guy. But
Tell him, Brad.
Fat Man Zoom and I told you so. Looking at this one, everybody was losing their mind because they thought they were losing their shirt on Rocket. And we said it is a buy because it is a joke at $19 or $20 a share, especially with all of the screaming real estate demand right now. Residential real estate is going through the roof. We've seen home improvement type companies that have just been blowing earnings out of the water. We just saw this past week that Rocket inked a new deal with popular real estate listing platform Realtor.com. If you want to look at a house to buy or sell, everybody nowadays is going to Realtor.com. So they're shopping, and now they will see advertising from Rocket Mortgage for pre-approved mortgages, and the ads will show up on Realtor.com, and users will connect directly to a Rocket Mortgage application, according to Inman. This is a huge deal for them, and I think that this only continues to move. It's crazy because once that news came out, the stock barely moved, and then the next day is when it really took off, especially when we saw mortgage rates, or mortgage applications numbers increase by like 8.8%. And it's just been an absolute monster. We don't have, according to the Fed, mortgage rates are still rock bottom, and they will be for at least until 2023. So you have mortgage, the 30-year rate right now is at 2.88%, 15-year rates at 2.36%, and that is absolutely incredible. So you're looking to buy a home, now's the time to do it. And most people are probably going to go through Rocket. The other thing is, for me, is that this also plays into that remote work line of thinking, because if you don't want to go to the bank and face somebody face to face to, go through the mortgage application process, you can do it right through Rocket, all online. So I will be bullish on this thing for as long as, for the foreseeable future. I'm holding on to Rocket. I'm not selling a dime of it.
I agree with you. Ema said, "What is Rocket? Never heard of it." I know. Listen, it showed up on the watch list. When did it show up on the watch list? August 24th. 5 weeks.
Yep.
We've had it on the watch list 8 times, people. If we're not bullish, what do you think? You mentioned the rates. The partnership, all good stuff. By all accounts, demand is high, unusually high, and we expect it to. And here's the other thing we're hearing is that the supply isn't there. So when you think about supply and demand and equilibrium, supply is, well, so right now demand keeps going up and the supply is not there. So you have to imagine people are not the people that own houses aren't selling them yet. They aren't putting them on the market yet.
Right.
And most likely because they're like, well, housing prices keep going up. I want to keep it. I want to hold on to it. Now, there will be a point, and this is how the equilibrium works, is that there will be a point where it just demand gets so high that it's just too good to be, it's like too good to pass up. So as a homeowner, you're going to be like, okay, yeah, I'm not going to get more than this. Like, this is great. I'm going to take it.
Right.
So I believe rates are just going to continue to go up until then the supply floods the market, and that will affect like housing prices, but that won't affect mortgages. This helps Rocket. So they're crushing it now, and there's no supply. So when the supply hits the market, think March, April, May, man, this thing's going to go off even more. So
Yep.
I'm really excited about it. There's a lot of bullish things on it. I can't tell you what's bearish about it. I'm sure there's something, but I can't tell you.
Yeah. This is one that is in the public account through Webull. So if you guys want access to see how much Rocket I'm actually holding here, make sure you're clicking the join button and becoming part of the Chaos Crew. I don't have any plans to sell this. Usually I'm swing trading a lot of stuff in this public account. I'm in and out. Rocket's probably something that I'm going to be holding on to for quite a while.
Can I say something? I want to cover our asses. This doesn't mean that we don't think that Rocket could go down at some point.
Exactly.
If it goes down to $21 or $20 or $19.96, like, okay, it's possible. So we're not saying that it's going to go up forever, but we're very bullish on it, and we feel good about it long term. And this time next year, I do not expect it to be at these levels.
Yeah. I couldn't agree more. And there you have it. Those are the 5 stocks that we are watching this week.